Yeah, good morning, everyone. So, uh, US market yesterday moved up sharply, uh, mainly driven by the futures were what we were seeing during the last 1 or 2 days, wherein the US market were closed and US futures were up. It moved up mainly driven by the uh, extension of the date for Europe to levy the duty. Uh, Apart from that, no further surprise also led to some improvement in the market. The volatility continued on account of various steps being taken by the US, and that is having its impact on the US market and even the other market as well. Uh, Today morning, futures are more of a flattish, and Asian market are also indicating more of a positive trend. Uh, we had seen yesterday sharp correction, and we are in the week of monthly settlement, so some volatility was expected. And today again, we expect that the volatility will continue. Looking at the world market, market is likely to see some positive trend today. Uh, Commodities are indicating more of a flattish trend. So more of a looking like maybe range bound to positive trend in today's trade. And I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open on a flattish note, and we are likely to witness some sideways momentum during a day. On the technical front, yesterday we have seen a selling pressure on the Nifty side. Nifty was closed nearby 1% on the downside, which gives some sort of a cautious sign on the technical front. Now, for the today intraday purpose, the support is placed at around 24,800. If it's break that level, then more selling pressure can be seen into the market, which might take a Nifty towards 24,740 to 24,670 levels on the downside. Whereas on higher side, 24,940 is acting as a very crucial resistance level. 25,000 level are the strong resistance level. Any more about that level only will witness some sort of a buying into the market. But as of now, the view will remain cautious. Uh, on the bank Nifty front, 55,140 is the immediate support levels. Any move below that levels will witness some sort of a more selling pressure in the bank Nifty as well, which might take a indices towards 54,870 to 54,600 levels on the downside, whereas the resistance is placed at around 55,640. If as long as Nifty stays below 55,640 levels, the view will remain cautious, and we are not likely to witness a positive move below above that levels. If it surpasses that level, then only we can see the positive momentum toward 55,870 levels. So the overall view is bit cautious. We might witness some sort of a selling pressure into the market. So not to be in a hurry to initiate the long positions in the first half an hour. Let the market settle down at the support level. And as per the market trend, we will definitely initiate the call. So that's it from my end. I request the way to team to take a call forward.
Yeah, thank you, Swati. On the derivative front, as I've been saying in the past few sessions as well, Nifty has been trading in a zone in between 24,500 to 25,000 levels. Importantly, the open interest continues to remain high. Even yesterday, it remained high. It is around the 2 crore mark, which is important. And whenever such things happen along with VIX, it is a sign of cautiousness. So definitely one can look to be cautious now for the next few trading sessions, at least up till the 25,000 level is not broken or the data is not coming down. Yeah, so a very good support area is around 24,500 levels. If that is broken, we can see further selling coming in Nifty. The PCR is below the one levels. If it goes below 0.7, it goes into the oversold zone, uh, which gives a little comfort going forward. But as of now, still negative. From the stock specific front, at this point, metal stocks look good. Apart from that, we can see some liquidation in some of the stocks. So yeah, next couple of days is where we are seeing, some sort of selling pressure which can probably come in. So look out for the same. Yeah, that's it from my side. Like to ask the fundamental team to take over, please.
Thank you, Nirav. Good morning, everyone. On the result front, PNG Hygiene and Healthcare Limited posted the result yesterday. Result was below expectations, where revenue was flat with the degrowth of 1% on a YY basis, and operating margins reported at 21.1% versus 25.7% in the same quarter last year. In the past few quarters, company's performance has seen better performance, and going forward, we believe the margins are believed to see recovery on account of moderation in CPI inflation and decline in its key raw material prices. The stock is currently trading at a PE of around 47 times to FY26 earnings, and one can hold the stock at this valuation. Gujarat Fluorochemicals Limited posted the result. Result was below expectations. Revenue grew by around 8%, and operating margins stood at 23.3% versus the expectation of 26%. If we look at the segment-wise performance, the bulk chemical segment underperformed during the quarter with the degrowth of 9% in its top line. That impacted the overall performance, while fluoropolymers and fluorochemicals has seen growth with 11% and 8% respectively. The management has indicated around 6,000 crore of EV capex over the next 4 to 5 years to build the large-scale battery materials manufacturing capacity. During FY26, it is expecting around 1,600 crore of investment, of which 1,200 crore would be spent on EV. The stock is currently trading at a PE of around 51 times to FY26 earnings, and we are positive on the stock over the long term. Thank you.
Good morning. One new IPO is opening up today. The company's name is Skoda Tubes Limited. The total issue is of 220 crores, which is a fresh issue. The proceeds from this issue will be utilized for capital expenditure towards expanding production capacity of seamless and welded tubes and pipes, funding the part incremental working capital requirements, and for other general corporate purposes. About the company, Skoda Tubes Limited is an Indian manufacturer of stainless steel tubes and pipes with over 14 years of experience. Based in Gujarat, the company offers seamless and welded products under 5 main lines, including seamless pipes, tubes, U-tubes, instrumentation tubes, and welded tubes. These products cater to industries such as oil and gas, chemicals, power, pharmaceuticals, automotives, and transportation. The company operates a backward integrated manufacturing facility with a 20,000 metric ton per year hot piercing mill for producing mother hollow, the key raw material for seamless products. They serve both domestic and international markets, exporting over 11 countries. About the valuation and recommendation, the company has reported strong financial performance with a top line CAGR of 44% and a remarkable 123.5% growth in profit after tax between FY22 and 24. This performance is largely driven by cost advantages stemming from economies of scale and successful backward integration. However, rising inventory days point to potential inefficiencies in stock management, while an increase in debtor days has led to higher working capital cycle. Furthermore, the company's ROC stands at 17%, significantly below the peer average of 29.5%. The company is valued at a PE of 45 times FY25 annualized earnings, which appears to be expensive when compared with the peer average of 32.1 times. Given the strong growth trajectory but emerging operational concerns and high valuation, we assign a neutral rating to the issue. On results front, Hindustan Copper Limited has posted its results and the results have improved. Revenue from operations have grown 123% quarter on quarter and 30% year on year. EBITDA has grown 147% quarter-on-quarter and 18% year-on-year. EBITDA margin came at 36.5%. The stock is currently trading at a PE of 50.7 times trailing 12 months EPS. NMDC Limited posted its results below expectations. The offtake came at 12.6 million tons versus the expectations of 12.7 million tons. It has grown 6.5% quarter-on-quarter and 1% year-on-year. The EBITDA per ton has declined 20% quarter-on-quarter and 5% year-on-year. EBITDA has also declined 15% quarter-on-quarter and 5% year-on-year. The PAT was below expectations, and the stock is currently trading at a PE of 5.8 times FY26 expected EV by EBITDA. JK Lakshmi Cement posted its results above expectations. The offtake came at 3.6 million tons versus the expectations of 3.5 million tons. It has grown 60% quarter-on-quarter and 10% year-on-year. The EBITDA per ton has grown 8.8% quarter-on-quarter, but has declined 5.4% year-on-year. The revenue from operations grew 27% quarter-on-quarter and 7% year-on-year. The stock is currently trading at a PE of 24.1 times FY26 expected EPS. Thank you.
Yeah, a few more results. Sky Gold reported numbers, which has shown improvement over last quarter and last year. Revenue grew by around 6% quarter-on-quarter and 106% year-on-year. Whereas EBITDA has grown by almost, EBITDA margin has shown marginal improvement at 6% versus last quarter 5.7%. Stock is trading at around 40 times TTM EPS. The outlook continue to remain positive on the Sky Gold. Then Zinka Logistic platform company for truck industry has shown improvement in results, wherein revenue grew by 30% year-on-year, and EBITDA margin has also shown sharp improvement. It has come at 32.6% versus last quarter 26%. So here again, the stock is trading at around 50 time EV by EBITDA FY20 Q4 annualized earning or 46 time FY26 earning. Outlook seems positive for the Zinka Logistic. Then Bharat Dynamic reported declining number or below expectations, though revenue came ahead of expectation at 1,777 crores versus expectation of 1,500 crores. But EBITDA has shown decline, and it has come at 299 crore versus expectation of 413 crores. This is mainly driven by the higher other expenses of around 300 to 400 crores. So that is having its impact on the EBITDA margin as well. That's all from us. I'll request commodity team to take up from here.
Yes, sir. Thank you. Thank you very much. Good morning, everyone. So yesterday we had witnessed some profit taking in gold and silver. We expect selling pressure could continue. One can initiate sell in gold around 95, 300 to 400 levels with a stop loss of 90, 95, 700. And on downside, we can expect prices to test 97, 700, 94, 700, 94, 500. Wherein silver, we are expecting prices to test 97,096,500 on lower end. So prices are resisting 98,000, 98,200. So selling in this range is recommended with a stop loss of 98,700. And in metals, copper, the June contract one can sell around 864 with a stop loss of 868, and on downside we can expect 858 on a lower end, wherein zinc we are expecting prices to test 254 on downside. So selling around 257 is recommended with a stop loss of 259. And in crude oil, prices already have opened gap up, but one should wait for a dip around 50 to 30, 50 to 20 and initiate a buy with a stop loss of 5180. On upside, expecting prices to test 5300, 5330. And in natural gas, also one should buy on dips. The June contract around 310 with a stop loss of 300. On upside, it can test 325. So that is from us. Thank you very much.